Welcome back for another top-notch video. This week, guys, we'll be speaking about 9 March through 13 March. Got a lot to cover. Going to do this video kind of quickly, kind of go over some of our charts. Well, we have had quite a week, guys. Quite a week. I'll go over all of that in just a minute. As always, our channel is about TSP funds, stock, Roth IRAs, retirement accounts, all of that. If you're in the TSP, we talk about the CSINF fund. And then we also talk about the ETFs, IVV, which reflects the C fund, VXF, which reflects the F fund, EFA, which reflects the I fund, and AGG, which reflects the F fund. Again, these equal each other for each one of these, and this is the S&P 500. This is small caps, international markets, and bonds. So, guys, we have had quite the week. Definitely going into last week, we thought we had just a correction going on, and it ended up being way more than that. We thought maybe we'd get down to maybe negative 15%. And we saw charts go way down, significantly down throughout that week. And in regards to that, this is what our charts look like for the week, guys. Pretty impressive. So we're down pretty significantly for some of these funds. As you know, we caught it on the way down a little bit, but we didn't expect to go down this much. So we're going to lay out our strategies on what we're going to do for the future. If you're curious where Top Notch is sitting right now, we are currently sitting at negative 8.47%, so still beating our equity funds here, but quite a ways behind the F fund. Really hoping for a significant snapback rally. Maybe can jump out at some point and limit those losses to maybe 4% loss before we might see this test the lows again. As I'm doing this video, we just saw futures go limit down again this evening, so that's very interesting, and we also saw the Feds cut interest rates back to 0. So we'll just have to wait and see and go from there. Like I said, I'm going to lay out my strategies, and we're going to do a little technical analysis for you guys moving forward. If we look at our charts, as you can see for the week, most of the charts were close to either 10% down or 15% down for the week for our equity funds. Even bonds didn't survive. We were still down a good chunk of 3% there for bonds, so quite significant in the charts. If we look at some of the commentary from TSP Talk, some of the things that they said in here, this is their cycle of market emotions, so I think we're definitely on this chart, guys, getting down towards this point of either panic or desperation down in this area in regards to where we are at with the markets. I think last week we were right around here, and I think we sold a little early, probably right around here in the fear area. Usually you want to sell in the fear and then try to get back in, but we didn't expect it to go down into a bear market. So now we're in a bear market cycle, so we start to see some optimism. We start to see this thing go up and down and up and down. It's either going to go trend up or trend down, so we're just waiting to see where that goes from there. Moving on from that, we have the S&P 500, as you can see, guys, drop significantly. We thought it might drop around the 2850 line, and we dropped even farther below that. That 50-day moving average is getting close to that death cross there on this chart. Really just seeing charts just crazy negative and positive days. As you can see, the last time we had back-to-back up days was back in February. Other than that, it's been just a few up days here, very big, significant up days, and then a lot of down days. Moving on, you can see that this plunge here for the S&P 500 has almost reached the limit of 2019. I definitely think we could get there for where we're headed for these charts, so we could see some more pain coming forward, and I could also see us coming back to some of these gaps here. So we'll have to wait and see where we're going from there. I think what we're going to most likely look for on the Top Notch channel is watching those 4-hour charts closely, see if we can get back to the 200-day moving average, and probably sell our positions right around there. On a weekly chart, one of the interesting things we saw here was it's on this trend line. It's getting close, which is good. It's a positive upward trend, and it looks like it's right around to touch that. So I think we could really start to see some trouble if we drop below 2,700 on the S&P 500. Dow Jones, we're seeing that 50-day average just about to do that death cross here. That's really not a positive sign for markets, and we'll definitely be looking into that. Now, we did take a number of this plunge here, but snapback rallies could probably come into this area here, another a couple points here on the upcoming months. So we're going to be looking for those snapback rallies and try to sell just a little bit in regards to that. But we just didn't expect it to drop that significant. As you can know, we bought somewhere right around this mark here, and markets are now down in this area here for the S fund. So quite a large drop. I think we could see about half of this come back, and we could definitely make some positive bounds in here moving forward. We're going to have to watch our shorter charts quickly. Last week I talked about volatility. We thought volatility would stay around the 35 line, 40 line right in here, and that jumped up to the highest level we've seen since the financial crisis. So we're going to see, instead of 0.5% gains in the market for the next coming weeks, we're going to see 3 to 4 to 5 to 10% market swings coming up in this market. So very volatile. You want to really be careful because in the TSP funds we only have 2 moves, so you don't want to sell on a bad day and then end up losing a lot of gain on the next day. So we're gonna look at it very strategically. Even the AGG or the F fund had a significant drop in that 200-day moving average. So quite impressive, guys. Really, really interesting. You can see it on this chart here on the weekly chart. Just a lot of really interesting things happening with markets. If we do a little more analysis here on the C fund on a 12-year monthly chart, you can see they put the Fibonacci lines in here and grow my TSP of where these lines could be. I think I like this trend line they drew in here. We'll have to see. That's all the way since 2009. Definitely hit that trend line, but didn't close below it. If we were to close below that, I think our next thing we could look into are probably these retracement lines here, the Fibonacci retracement lines. So very interesting. Got a couple interesting weeks coming up. As far as markets go, you can see that the indicators are still in a downward trend, but this is the area you want to buy, or this is the area you want to buy, but this is really a bad area. We want to see a little positive improvement, maybe bounce off this line a little bit, sell, and see if this trend line continues down in a downward momentum. As far as the S fund goes, just seeing a lot of negative volume on this chart. This chart is almost all the way to the bottom, so we bought in here again towards the beginning of March, and right around the middle of this line, and it continued down. Have to wait and see where this goes. Not seeing indicators move up yet, but very oversold for the most part. For the S fund for DWCFP, which is an indicator of the S fund as well, VXF, we're really seeing it hit that like 2018 level right before we hit 2019, and we got a very significant V bottom here. That's extremely rare. We don't typically see that with markets, so I don't think we'll see that coming off of this. We're going to watch our 4-hour chart closely, but as you can see, this was quite the big snapback rally. If you would have sold somewhere in December and not got in until the end of January, you would have lost out on a significant amount of funds there. So that's why we want to be careful with funds. Again, very, very oversold territory. We don't tend to stay there for too long, so we'll have to wait and see how long that is. Just very interesting. iFund as well, EFA, there is no really support below this line here, so I don't know how low that could go. We are in very oversold territory. Don't see the indicators coming back anytime soon. On a short-term basis for these charts, this 10-day moving average has really been kind of a resistance level for some of our charts, and I would like to see it break that level or get above it before we see something. Otherwise, I just see more selling and more down pressure as far as that goes. As you can see in March, we are way below here. We sold in this area. We bought in this area here, guys, when we were thinking we were coming back up, and we're below the center line. We still think we had a pretty good buy. I mean, negative 8% for the year is not as bad as basically not as bad as what the markets are right now. So we still think we had a good buying point. If we were to buy and hold, we'd still be pretty happy with where we're at. We're just trying to see if we can catch some of these snapback rallies. So very interesting for our charts, kind of where we're at. If we look at things from a technical analysis for charts, I'll have that for you here. IVV, as you can see, I'm not going to do an IYY just because it's very similar to some of these other charts for this week. A lot of downward movement here. What we're looking for is trying to get back to this the 200-day moving average. I think we'll definitely see that in the future, but we got to find a bottom first, so that's what we're looking for in IVV. On a positive note, technical analysis for IVV on the charts, 4-hour charts. You can see we're starting to come back up here, but our long-term charts still show weekly down pressure selling. Usually about 4 bars. We're at 4 bars now. Definitely jumped in a little early. Wish we would have jumped in sooner. Friday was a big move, but yeah, still down here on the 2-day, even just coming out on the 2-day for that. And then that 4-hour chart, we'll probably end up selling once we cross the line here. We bought in around this area here, and it was a very, very short 4-hour chart. Just because it was so early in the month, we didn't sell, and that ended up being a mistake. Lost quite a bit there for that period. So gonna have to find a way to make it up. We'll have to make it up. We'll have to look at charts and stay on our toes in our games. And with bear market, we have different strategies for a bear market versus bull market. So we will go forward and continue with those, and you guys will see. We'll always post our moves in our Facebook and Twitter pages for you guys. As far as the S fund goes, or VXF, chart doesn't look very positive, guys. Way below here. Looking to maybe get back to this 200-day moving average. Never did even see it get back to that. So that's what we're looking for there. On a technical analysis for VXF on a long-term chart. A lot of downward pressure movement, nothing really solid here. The only thing I see is we're way out of the Bollinger Bands. Might try to get back into the Bollinger Bands this week. That's what I see from a long-term chart. Short-term charts, we see that this is starting to turn around a little bit, which is a good sign. And then on a 4-hour chart, we see this kick back a little bit again. We bought in right here where we saw this 10% pullback would have been. Did cross here. The blue line did cross here, and that's why we had our justification for buying back in. But like everybody out there, we don't know what markets are going to do in the future, and we thought we had a good buy here, and we probably should have sold when we saw this drop right below the line somewhere in this area here, and here's where we are today. So we'll have to readjust our mindset for bear market versus bull market, and not have as much of a positive outlook when we start to see the derivative oscillator drop and price percentage oscillator drop. So we definitely will have a more defensive strategy going forward, and I think we could definitely still recoup a lot of our losses for the year in these charts. EFA, like I mentioned, there is no trend line, very big waterfall effect. That 50-day moving average is about to move below the 200-day moving average. This 200-day moving average is now looking to kind of roll over, so keep that in mind. Like I said, if these charts get close to the 200-day moving averages, that's where we're gonna probably end up selling, because we'll probably see it come back, but the 200-day moving average will be a little bit lower in the future here. So we'll see where we'll go from there, guys. This is AGG. AGG F fund wasn't even spared, so I know on the TSP it wasn't that bad on Friday, so you might want to really think about where your funds are allocated, because this doesn't look as well either. I mean, there's just no safe market right now other than the G fund. Why charts balance out. If you don't like volatility, that'd probably be a decent place to be, but we really, on the Top Notch channel, don't want to end up selling our positions where we got our like 10% discount, or we're 8% right now. And the reason our numbers are a little bit off, or we were 10% behind the C fund, is because that S fund is so far down. We might allocate a little bit more towards the C fund, or put new money, the new money coming in towards the C fund. But yeah, this is pretty bad too. This was a pretty decent drop. I mean, that's like a 2-3 day drop right there. That's significant, and that's below the 200-day moving average as well. AGG, or the F fund here, as you can see on the 4 hours, starting to come back a little bit. On the weekly chart, though, yeah, steep drop this week. Look at that! Look at that huge spinning top here. Weekly chart's on its way down. Definitely, towards where the beginning of February was, or end of February. So all of our March gains pretty much gone for AGG. On a midterm basis, massive price movement down below that PPO line, way below there. And then on a short-term basis, just not looking so positive, guys. If I could have redone things from last week, if I was, had a more bull or bearish mindset for a bear market, I would have definitely stayed out, I think. But we were not in a bear market at the time. We were at a correction point where we saw some of these other charts jump back from correction points, like in 2018 was at that 10% mark, 10 to 12% mark. Just didn't happen this time, guys. So it's okay. We didn't take that first 10% hit. We took the next 15% hit. Hopefully get about 6 or 7% back, and keep working hard in these markets. If you guys have questions, comments, or concerns, please write those in the comments below. Really appreciate you guys subscribing and watching the channel. And as far as our allocation goes, we're still in the CNS fund, 50-50 with new monies going into those allocations. And we're planning on probably holding for some time to see how this volatility plays out. Looking to try to get back those 200-day moving averages. Possibly selling our positions there before we see another plunge back down to test the lows again, because V-bottoms are very rare. I don't think we'll see that like we did in 2018. So we'll be looking for that, be looking at our short-term charts. And I wish you guys a great week out there. It's definitely been an interesting trading environment. That's another top-notch video. We'll see you guys next time.